The subcommittee will come to order. Good morning and welcome to today's hearing. I'm happy to welcome Glenn Smith, Board Chairman and CEO of the Farm Credit Administration, and the FCA Board Member, Jeff Hall, as we discuss the agency's roles, responsibilities, and the budget request for FY 2021. So I thank you both for being here today. Last year, we held a hearing with FCA and the system that examined the state of the rural economy and the challenges and the opportunities that our farmers, our ranchers, our producers, and our rural communities face. Since then, there have been some positive developments, such as the signing of the Phase 1 of the China trade deal, in which China has tentatively promised to buy more agricultural products from the U.S. and the passage of the U.S.-Mexico-Canada agreement. This is good news for our producers, but the reality for many is more complicated, and 2020 still holds many uncertainties for them. While the USDA's Economic Research Service forecasted a rise in net farm income in 2019, due in most part to direct government payments, there are some alarming trends in the ag sector that must be examined and that we have to address. Last year, according to USDA, farm debt reached record levels at $416 billion. Farm bankruptcies are at their highest level since 2011. Wisconsin and my home state of Georgia are at the top of that list. These trends appear to raise significant warning signs for the year ahead, and I'd like to hear from both of you on your outlook for 2020. Looking at the budget, the request for FY 2021 is $81 million, of which 87% is for personnel costs. A third of the examination staff and half of the non-examination staff will be eligible for retirement within the next 5 years. This represents hundreds of years of institutional knowledge leaving the agency, and it mirrors the wave of retirements and vacancies that we're seeing elsewhere in USDA. In the Farm Service Agency. I'm glad to see that your budget request identifies the human capital needs and the initiatives and the investments as priorities, and that the Farm Credit Administration is focusing on knowledge management. I'm also glad that you're focusing on improving services to young, beginning, and small farmers. A recent ERS report looking at beginning farms and farmers noted that beginning farm households have less wealth and have more debt relative to their assets than established farms, ensuring that new farmers have the resources, the support, and access to credit in order to sustain their business early on should be a priority for all of us, given that our farming population is both declining and aging. So I look forward to hearing more about the Farm Credit Administration's outreach to this group of very important farmers. Again, I want to thank you, Mr. Smith and Mr. Hall, for being here today, and look forward to today's discussion. Now I'd like to turn to our distinguished ranking member, Mr. Fortenberry, and ask if he has any opening remarks, and if so, I yield to him at this time.
Yes, Mr. Chairman, I have a few opening remarks. Thank you for yielding time, and thank you for calling this important hearing. Good morning, gentlemen, and welcome. Chairman Smith, Chairman Hall, I'm pleased to see that you're here before us again, and here's why. Around this very time of year, last year, our farming community, ranching community, and the rural communities of both eastern and western Nebraska, and western Iowa as well, experienced a 500-year flood event. It washed away the topsoil that will take generations to replenish. It left a massive trail of silt and debris across corn and soybean fields. And then, of course, thousands of head of livestock were lost. But in the true Nebraska spirit, neighbor helping neighbor, our communities came together to recover and rebuild and become stronger than ever. So I'm proud of that. Our regional banks played an important role in this recovery, extending critical financial resources to aid in this effort. And so did you. The Farm Credit Service of America and other financial institutions in the farm credit system supported our communities and allowed many farmers and communities to get back on their feet. I want to also publicly thank Chairman Bishop and, frankly, the entire Appropriations Committee for their sympathy and understanding in working with us to really get our minds around the reality of what happened to us and to be supportive in extra resources. So thank you, Mr. Chairman. And your appearance before us today is timely because our farmers and ranchers and others in the ag community are facing a number of challenges, from low commodity prices and tight margins to the externalities born of hard but absolutely necessary trade negotiations to have a reset, a reckoning, so that America is treated fairly. We also face natural disasters, as we all know, and something that we don't talk enough about in farm communities, this ever-escalating cost of health care. So your organization is critical in ensuring that the local farmer in my district or the young man or woman interested in agriculture has the financial resources to start, to purchase seed, tractors, combines, fertilizer, and land, and has ways to both store and transport their products. But today I want to touch on 3 areas of interest. I am eager to get an update from you on the state of the farm and rural economy, as well as the health of the farm credit system. We need to know if there are any warning signs on the horizon, and to know if Congress needs to act in preparation for any threat coming to the farm economy. In recent weeks, I've seen headlines about an increase in the number of farm bankruptcy, as Chairman Bishop noted. One prominent headline shouted that farm bankruptcies increased 20% in 2019. Unpack this for us. Is this isolated to the dairy industry or reflective of a broader trend? I recognize that we've had a number of good years, and an increase in bankruptcy from a very low level is still a problem, but it has to be put in context. Secondly, how does the farm credit system work in conjunction with USDA programs funded in our appropriations bill? I think this is important. I'd venture to guess that the public in general knows very little about USDA's loan portfolio. So in this fiscal year alone, the USDA has loan authorizations exceeding $46 billion. So there seems to be an embedded risk in the farm credit system absent these USDA loans. Is there something that needs to be done in this fiscal year of the appropriation process that reduces financial risk even further in light of the potential threats on the horizon that we hope you identify? I'd like to look closely at the financial relationship between the USDA and the farm credit system as we begin to develop this year's appropriations bill. And lastly, I'm interested to learn in particular initiatives that you've undertaken, such as rural broadband and other infrastructure, as well as, again, as the chairman mentioned, lending to young and beginning and small farmers, especially since your agency sets in place policies that will influence lending decisions affecting the long-term viability of rural communities. It's important that we unpack this as well. So many people outside our own agricultural community don't have familiarity with the farm credit system and how it plays a critical role in ensuring that America has, per capita, the lowest grocery prices in the world. That's called food security, and something we take for granted. Food security is the basis of stability in any society, and we've seen the disruptions that can occur in faraway places when these factors come to have to be borne by people who do not have the capacity to react to them. It unravels social dynamics very quickly, causes migration, land degradation, and on and on. So again, food security is absolutely critical. So without our farmers and ranchers and our dependable access to the abundant and affordable credit, we may not have this situation that we have in America, this gift of an abundant, well-produced food source, again, that keeps our prices lower than anywhere else in the world. So you provide a backstop to the farm credit system. Your backstop is more important than ever. So I thank you for being here and look forward to your presentation. Thank you, Mr. Chairman. I yield back.
Thank you very much, Mr. Fortenberry. Mr. Smith, without objection, your entire written testimony will be included in the record, and I recognize you now for a brief opening statement, and then we will proceed with questions.
Very good. Thank you, Mr. Chairman, members of the subcommittee. My name is Glenn R. Smith, Board Chairman and CEO of the Farm Credit Administration. Sitting to my left is my fellow board member, Jeffrey S. Hall, who is Chairman of the Farm Credit System Insurance Corporation. Our past chairman, the late Dallas Tonsinger, last testified before this committee last April of 2019. And on behalf of his memory and our dedicated staff of the agency, we're pleased to provide this testimony here today. Before I give my remarks, I would like to thank this committee for your help with two issues in last year's bill. First, you raised our funding cap to address the unanticipated FERS assessment after our fiscal year 2020 budget submission. The second issue involved a statutory limitation that could have reduced export sales of our domestic farm products. You and your staff worked with the authorizing committee and your Senate counterparts to resolve the issue, and for that we're grateful. Our fiscal year 2021 proposed budget request of $81.01 million is an increase of 4.35% over the fiscal year 2020 revised budget. 86% of our budget is dedicated to compensation and benefits of our employees. The budget request anticipates increases in the agency's contributions for retirements and includes $610,000 in reimbursable funding. To maintain our talent pool of dedicated employees, we aggressively recruit every year on a rotation of 16 schools for entry-level positions, including HBCUs. But more importantly, retention is just as important as recruitment, and we strive to maintain a positive working environment in our agency. 2019 FCA was recognized as the second best place to work among small agencies in the federal government. And I'm very proud to report that one of the subcategories of this high rating was our support of diversity, in which we ranked number 1. Since I became chairman last year, we've been working on a number of important rulemakings. Some of them have focused on strengthening the system, while at least half of them have focused on streamlining regulations to make them clearer for system institutions to follow. Another priority of mine, as you mentioned, Mr. Chairman, is the mission to serve young, beginning, and small farmers and ranchers. Our initial efforts have been to improve the data reporting accuracy to get a good baseline and meet with stakeholders and explore best practices. Our goal is to further enhance the system's YBS mission and ensure that America's next generation of farmers and ranchers have access to the tools they need to succeed. The U.S. farm sector continues to face challenging economic times. In 2019, farmers and ranchers encountered declining financial conditions amid large commodity supplies, weak prices, and of course weather extremes. High operating costs for labor, farm inputs, and other expenses are still putting stress on farm cash flows. Farm subsidy payments help, most notably crop insurance and MFP payments, and were in many cases the difference between net operating loss or profit. Despite the challenges in the overall farm economy, I'm pleased to report the system banks, as well as Farmer Mac, are fundamentally safe and sound with strong levels of capital. As of September 2019, the system reported positive earnings that continue to support that capital growth. Overall, portfolio credit quality does continue to decline, and the system institutions have strong risk-bearing ability. Meanwhile, we're watching those trends very closely. Compared to a year ago, I do see some positive factors that should improve the ag outlook for 2020. A year ago, we had almost no trade agreements in place. This year, we have USMCA bilaterals with Japan and South Korea, and of course, Phase 1 with China. It may take patience, but at least the groundwork has been laid for trade normalization and improved farm prices. And the Fed's policy of lowering interest rates certainly improves margins in our highly capitalized industry. So I am cautiously optimistic for improvement in agriculture as we enter a new decade. As Congress intended over 100 years ago, the Farm Credit System, with the Farm Credit Administration as its regulator, is well positioned to meet the credit needs of the American farmer and rancher. Thank you, and I'm pleased to take your questions.
Thank you, Mr. Smith. Before we begin the questions, as you pointed out and as you indicated in your testimony, your appearance today and your testimony was in memory of Mr. Tonsinger. I'd like to, with unanimous consent, ask the committee to observe a moment of silence as we reflect on the service of Mr. Tonsinger. Thank you. Well, Mr. Smith and Mr. Hall, as I mentioned in my opening statement, and as you mentioned in your testimony, 2019 was a particularly difficult year for U.S. farmers and ranchers as they faced trade uncertainties, large commodity supplies, and extreme weather. And yet, despite these challenges, farm income increased largely due to the government payments. This was certainly good news for the farmers for their bottom line in 2019, but what are their prospects this year, and what are the major warning signs we should be paying attention to? And does one of the trends, the rise in farm bankruptcies, increasing farm debt, low commodity prices, the high level of loans classified as less than acceptable, does that worry you more than the other?
Well, it certainly does, Mr. Chairman. We watch those statistics very closely. In fact, on a quarterly basis, we keep track of our institutions and their credit quality. And as you said, bankruptcies is a concern, but it starts with adverse loan quality, which this last year, as of the third quarter 2019, was up to 7.4% from 6.6%. The definition of adverse loan quality is usually deteriorating current ratios, deteriorating margins, deteriorating liquidity, sign of possibly some problems coming down the road. The next category is non-performing loans, and at the end of the third quarter, they were less than 1% at 0.92%, but up from 0.83% from a year previous. That non-performing, just what it is. Those payments have been late. The next category is our delinquent category, and that's at 0.3%, significantly less than 1%, up slightly. Our 10-year range has been 0.2 to 0.66%, so we're about midway in that range. Numbers themselves aren't alarming yet, but we're watching the trend closely because this does indicate a 4 to 5 year trend of decreasing loan quality. So that's certainly something we have been watching. We've seen a recent article by the American Farm Bureau on bankruptcy, estimated that bankruptcies were nationwide were up 20%. Nationwide, those numbers probably aren't as alarming as the local areas impacted by certain industries, certain states, like Wisconsin. And unfortunately, Mr. Chairman, your state leads the list on that. I believe the statistics was 57 bankruptcies last in 2019, up an alarming 57% from the year before. And a lot of that, some of it was dairy. I think some of the profitability in the peanut industry and the forest industry, which I know is important in your state, was deeply impacted not only by the tariff scenario and exports, but also by the hurricanes. Absolutely. And devastating. And I think we talked about that last, and there's no government payment. There was simply disaster assistance available for that. So in answer to your question, we're watching those trends very closely from a national perspective. It's the numbers aren't alarming, but certain key areas like Wisconsin, Georgia, dairy, forestry bears watching. The solution, and as Congressman Fortenberry pointed out, in those disaster areas where we have seen some significant problems, we've talked and suggested directly to the institutions that they persevere as long as they can with those borrowers. You mentioned a 500-year event. You don't recuperate from a 5-year event in just 1 year. A lot of times it means amortizing that loan out on a longer basis. So wherever possible, we like to feel that we're sticking there with the American farmers and ranchers at good times and poor.
That time is about up, but can you give us a sense of the current stress within the system's farm loan portfolio?
Yes.
And are there certain commodities or certain regions that are more high risk than others?
Certainly dairy, as you identified, is a problem area, and that's nationwide, and that's something we're watching very closely. The forestry area was impacted profoundly by the trade issues, and there was no government programs available for that. Those are two industries, along with in my Midwest area, my home area, grain crops continue to see duress.
Thank you very much. Mr. Fortenberry.
Thank you, Mr. Chairman. In that regard, Ms. Smith, can you talk about the decline in land prices? Again, is this isolated to the areas that you spoke of because of regional considerations, or is there a general trend downward? And then one of the challenges in your business, frankly, is if you have a declining level of capital, yet you have a performing loan, yes. How do you manage that in terms of your books?
As far as land values, it correlates directly with enterprise risk to certain areas of the country, and most of the impact has been in our area of the Corn Belt and areas impacted like dairy, some areas of the Northeast, although as far as declines in land values, very surprising that land values have held in there that resilient. It does irritate me a little bit to hear that land values have stabilized, because I always add for now. If negative circumstances were to continue, certainly land values are vulnerable, and we saw that back in the 80s, beginning in 79, 80. We had trade issues back then. We had some severe problems in ag. We saw about a 15 to 20% loss in land values in the Midwest, I'm most familiar with, in the Midwest, and then we saw a stabilization from about 83 through 84. And then from there we went off the cliff as far as land values. We're not there yet. If you compare us to the 80s, definitely we're not there yet. But as far as land values, there still is a certain element of fragility to it.
But you have the dynamics within the management tools, financial management tools within your constructs.
Yes.
On performing loans that might have actual lower capital values based upon the ups and downs of land.
Yes.
To actually work through that for the long term.
Yes, sir.
There have been instances where if you've got a performing loan but a drop in the value of the capital asset, then you've got problems on the books. But it's an artificial problem. So do you have, again, the flexibility in the portfolio to weather that?
We believe we have the strength in our portfolio. Number one, our strong capital position, which is something we did not have in the 80s. And the other thing that we need to emphasize with the farm credit system, it's very diversified.
That's actually a good point. In the 80s, you did not have that flexibility, and it actually accelerated the problem.
Particularly in Corn Belt, in the Corn Belt area, yes.
Let me turn to beginning farmers and ranchers, and this is important. The reason is that a number of us, including Ms. Pingree, have worked on this issue, and production agriculture is the backbone of, again, in many ways, America's economy. One of the last things we produce en masse, we've got the values of stewardship by our farmers and ranchers, as well as significant resource capacity in our country that positions us extraordinarily well to, again, help the world in this regard. However, there's only so much land. Yes. Land is concentrated in fewer hands, but the interest in agriculture is growing. The University of Nebraska's ag program's growing. And agriculture, in terms of a siloed field around agronomy or animal science, is not the case anymore. It's environmental science, it's biology, it's international development, it's the whole ecosystem of well-being. Again, starting with food security, this is very attractive to young people. So while young people who may not be coming from a farm background or tradition may not ever have the capacity to own 1,000 or two acres, nonetheless expanding the agricultural family through specialty crop production, part-time ag interest, again, recreating the types of production that might be smaller scale and more traditional forms of agriculture actually are exciting new opportunities. Does your perspective or, again, rules that govern you allow you the entrepreneurial capacity to begin to move in that space more aggressively? Because this is expanding the agricultural family, and I think that's very exciting.
We believe it is, and it was one of the first things when I came to the agency. I researched and looked into our mission on young, beginning, and small farmers. And while we were involved in it, and every association is required to have a program, I felt we could do more. And we have began programs to do more. And it's not a fast process, but the recognition that those small and beginning farmers, and of course I can say that from a first-hand basis because I was one, is very, very important to that.
Thank you. Ms. Pingree?
Thank you very much, Mr. Chair, and thank you for holding this hearing, and thank you and your team for taking over, and I appreciated having a chance to chat with you a little bit about this. I have one big question, but since my colleague just asked about this, I'll just follow up on that, and I know I actually asked you the same question and really appreciated you giving it this sort of bipartisan slant, but also, you know, the difference between Nebraska and Maine is pretty significant in terms of how many farms, how big their farms are, but it's a reflection of how this is happening around the country, and that there's a lot more interest in young people in all of the very things that were just talked about, value-added products, dealing directly with restaurants. There's just a whole new market opening up, and certainly that's been a concern in my state of the inability of Farm Credit at times to sort of see the value of getting into those loans. So I just want to commend you for doing that, and say that I'll certainly be talking to our farmers back at home to make sure they understand there could be more opportunities, or there are more in the future. And the one thing, and we've all really grieved with the state of Georgia as they've gone through just this horrific process of trying to recover from a storm most people didn't even notice, frankly. But the reverse of that in Maine, we've only had 3 Chapter 12 bankruptcies in 2019, and I think a lot of that is because we're promoting much more of small to medium-sized farmers who are, actually really doing pretty well, even though on the books they don't always show up as commodity crops or the kinds of things that are conventionally seen. So I think maybe I won't even force you to answer that because I just want to get on to another topic, but I wanted to commend you and say let's keep working together on that, and I'm really grateful that there's interest across the committee on it.
Thank you.
I want to get in a question, excuse me, about hemp. I think it can sometimes be the bane of our existence here in Congress dealing with hemp and CBD because there's been a lot of confusion around it. But there's been great interest since the Farm Bill in Maine. It's growing at a rapid pace. It's grown in every one of our 16 counties, 2,000 acres in 2019. But there are these growing pains. We had one farm last year, the Sheepscot farm in Maine, they were dropped by their insurance company. They were also dropped by their bank because they were growing hemp, and there is this confusion. We are hoping that some of these regulations get straightened out, and we can work more on that. But what have you been hearing from the banks in their willingness to lend to hemp growers? What steps are you taking since the USDA published its interim final rule, which was last October, to help hemp growers gain access to credit? There's a real no person's land out there, and it's scary for the farmers.
Certainly. And any new enterprise, we greet it with excitement because it's always nice to see a new alternative to our cash crops. If I may, I will defer that question to my fellow board member. Jeff Hall is from Kentucky, which was one of the pilot states, and I'll let Jeff field that.
You've hit the exact point. There's so much of the infrastructure that has to be developed in order for producers to benefit from this potential crop. We've actually released guidance to the system. It's legal now as a result of the Farm Bill, but there's so many more questions. FDA has to get involved, transportation, all of those issues. So it's gone from an issue of being legal to an issue of credit worthiness. And for farmers, the system is able to loan to producers in hemp, but by and large, those loans are basically security with other crops. So rather than just directly lending to hemp, most times it's an operating loan for different enterprises. So we will have to wait and see, but we are very cautious, but we're optimistic that things will develop in the infrastructure. There's a multitude of possibilities on the use of hemp, but there's so many more questions that yet have to be answered.
Well, I appreciate that your guidance is specific about it being legal. I do understand that credit worthiness becomes an issue because there's so much flux in the market right now and because there isn't sufficient infrastructure, but more there's the confusion about if you make your investment, will you be able to sell your crop, or at the end of the year, won't it be viable? So some of the things that we've heard in the past are banks or credit unions just getting nervous about legality and the uncertainty of that. And so it's important for you to be issuing those kinds of documents to say to banks and credit unions, you know, you're okay, you're not going to jail, the regulators aren't coming in to get you. But I think there has been a lot of confusion. And unfortunately, since we haven't been able to move the Safe Banking Act in the Senate, which does have provisions to make it really clear about hemp, that's just one more obstacle. But I feel for you in Kentucky. I know there's a much more active state, but I appreciate your level of awareness, and hopefully we can get this straightened out in the near future.
Absolutely.
Thank you, Mr. Chair. You bet.
Thank you, Ms. Pingree. Mr. Molnar.
Thank you, Mr. Chairman, and thank you for having this hearing today. And I want to thank you both for being here and your testimony. I wanted to talk with you a little bit about the farm credit system and areas that I'm interested in relative to rural infrastructure. It's something in my district, you know, I hear a lot about the needs of infrastructure, aging infrastructure. There's also the need for rural broadband, which I would kind of include in that area. I'm wondering what limitations there are for the farm credit system to be involved partnering with rural infrastructure, what areas we might be able to expand opportunities, and any insights you have in that area.
Okay, thank you. And that's an area that the system, I'm proud to say, is actively involved in. Right now, our Title III lending, one of our major banks has Title III lending authority, and historically that's been in rural electrification, rural water, wastewater treatment systems, and but about $7 billion right now currently is committed to communication projects, of which broadband would fall under that area. So, so certainly we have the authority there, and I believe my last hearing, Congresswoman Spanberger mentioned, I thought it was a great quote. She said she thought rural broadband would be the rural electrification of this century, and I definitely agree from that, coming directly from the farm in a rural area, that connectivity is so important. They talk about the farm technology. It's not only just farm technology, but it's our schools, it's our hospitals, it's our ag businesses, our small manufacturing companies that need to connect with the world. If we don't have that connectivity that puts us on a level playing field, quite frankly, we'll lose it. I can look back, my wife sitting behind me in the green of almost 40 years, when we were beginning farmers, small and beginning farmers back in the 80s, we literally ate and paid our light bill from her paycheck of working at the hospital. And that probably continued about 10 years before we finally got our footing in our ag businesses and in our farming operations. And so it's critically important to maintain that rural infrastructure. And I'm proud to say that Farm Credit System has an active part in that. Another avenue is what's called our mission-related investments, where we can go into local communities on a case-by-case basis and invest in facilities that may not be directly related to ag, but certainly critical to the rural economy, and that is those hospitals and those senior care facilities and things that we desperately need. Rural America desperately needs capital, and that's one thing that we see our role at Farm Credit is linking that capital in those global markets to the sale of our securities directly to that farm gate. So I'm a very, very strong proponent of that.
Is there anything more we can do to communicate that in our districts, in our communities, so that people on the ground would kind of understand those opportunities, or do you feel like that information is well disseminated?
Well, we've found that most of the institutions, it tends to be more localized. They maybe have the expertise and experience in different areas that we're able to grant them that approval. So if we could educate, I think there's a huge potential for other areas and other institutions to do that. So yes, sir, I do believe there is a little bit of void as far as information on that.
Well, any recommendations you or your team have in terms of how we can facilitate that communication? Because I know it's a huge priority in my district and in rural Michigan, so would welcome your insights on that.
Yes, well, thank you, and we are bumping pretty much up against our authority on that, and if in your wisdom you feel that we need to expand on that authority, we would obviously would help us in those areas.
Thank you very much, and thank you, Mr. Chairman.
Mr. Aderholt.
Thank you, Mr. Chairman. You referenced in your comments, I believe, that the market facilitation program.
Yes.
And how it was been able to steady the ship for many farmers. Yes. Over the last year, especially the farmers that's really had a difficult time. Looking ahead, can you talk about the improved trade certainty that how you think will hopefully bring the incomes back up to these sustainable levels over the next year and years to come? Yes. Yeah, just your thoughts on that.
Well, as I say, the groundwork's been laid. Hope is better than no hope, right? But the markets have taken the stance is show me. They need to see ships going overseas with our products. We need to see actual export numbers before they react it. For instance, soybean futures are roughly about 60 cents less than they were early January. So we haven't seen any profound movement yet, but it will take time. It will take patience. Trade agreements obviously don't happen overnight, and recapturing that trade. There seems to be a lot of discussion right now over 2020 MFP. And I said that crops were months from even putting it in the ground, yet alone raising a crop, yet alone storing that crop and marketing that crop that goes into 2021. So we've had the last payment now authorized for the 2019 crop. And I guess the attitude needs to be, let's see if this will work.
Let me, my colleague, Mr. Milner, mentioned the rural aspect, and I also want to focus on that a little bit, and the cooperation between the farm credit system and the community bankers, and how they can effectively spread risk and enable new projects that previously were, quite honestly, were probably unfeasible to do. Can you outline some of the work that FCA completed in the past year to encourage rural investments for important infrastructure? I know we talked about broadband was mentioned, but also rural hospitals, that aspect as well.
Okay. Certainly, as far as the rural hospitals and our mission-related investments, one of the criterias for us buying those bonds and participating is to make sure that local institutions are offered the opportunity to partner with that. And that's very important. We're not trying to take the business. What we've found is that criteria, a new hospital in rural America, a $25 million price tag is often beyond the scope of local banks, and yet it isn't enough to attract the big players in the financial industry. So we feel the farm credit system has a very valuable tranche there they can fill with
A
that.
niche there for that, a niche there for that
Yeah,
particular.
we feel there's a niche, right, but it is important at the same time that we offer participation, and as I say, it is a criteria for the investment, and it has to demonstrate, the institution has to demonstrate that they've contacted those local institutions and offered participation.
You may not know anything offhand, but if you can think of anything that we can do to expand that, and our kinds of, to these kind of investments in rural America, like broadband, rural hospitals and all, that would be certainly important for us to know. I think that's all I have right now. Thank you, Mr. Chairman.
Thank you, Mr. Adderholt. Dr. Harris.
Thank you very much, Mr. Chairman. Let me just follow up a little bit. I want to thank the gentlelady from Maine for mentioning the possible problems with hemp as a crop. And one of the issues I know is that if the THC level is too high, an entire crop could have to be destroyed. And my understanding is that is not covered under crop insurance plans and things. So would that be a total loss for the farmer if that had to occur?
I'll answer the question initially because I know that crop insurance covers crop loss, but what I read doesn't differentiate whether that loss is necessitated by being over 0.3% THC or from natural disasters or weather. And I assume it's maybe from natural, it doesn't include the necessity to destroy it. If I might, this is an area that my fellow board member has worked extensively with. May I defer the question to him?
Oh, absolutely.
Congressman?
No, I think you're exactly right. If it is above a certain level of THC, the crop has to be destroyed by DEA. And as a result, the farmer would have no income from the sale of that crop. And there's really no crop insurance coverage for that.
So do the farm credit agencies, because you had suggested that in fact, the loans are not made solely for the hemp crop. It's usually a more broader base of protection for the farmer in terms of loss. But are there protections in place for the credit agencies that limit the amount of exposure that a farmer can have to a total crop loss from that portion of their portfolio that's in hemp? Or could a member agency just say, well, no, if this farmer just wants to grow hemp, we're fine with that too? I mean, because that would seem an unacceptable risk to me.
Well, it's a risk that the individual associations would make, or banks, commercial banks would have to determine themselves. We don't have any particular guidance related to that.
But as overseers of the system, why wouldn't you have guidance on that?
In our guidelines, we clearly point out those risks. We highlight those risks of losing the whole crop.
Okay, thank you very much. And my colleague here mentioned the importance of trade and the interaction of the globalism of agriculture basically, and how trade interacts with it. In my district, I know that poultry is big in my district. Could you discuss because a lot of time is spent on soybean and grains, but the importance of international trade for livestock and dairy, and my understanding is the USMCA actually made significant advances in terms of our ability of our dairy farmers to participate in trade. Could you elaborate on the importance again of livestock and dairy?
Be happy to, and protein products in particular, including poultry, probably have some of the best potential of income gain the next year. If you look at the bilateral with Japan, you've seen our beef markets have stepped up into a nice area due to those increased exports to Japan in just the last year. So there's clear proof that we get back to some trade normalization, we're going to see some benefits. China, the goal of 77.1 billion import of ag products over the next 2 years versus $20 billion a year prior to the tariffs will help all sectors, ranging from timber products to poultry. But given the disaster that they've had in that country with the African swine fever and that chronic shortage of protein that they derive primarily from pork, there's some huge potential. And if you look at the export numbers, they have been improving all over the world, on poultry in particular.
No, and I'm aware of that. And just finally, you know, again, there was a lot of talk about, and some of the discussion in your testimony about, you know, trade uncertainties and all. It's clear there were trade uncertainties with regards to soy, important product in my district. But my understanding, and since the financial results are so good for the last year with regards to the farm credit agencies, my understanding from my farmers is that the president has kept true to his promise to try to make whole those farmers who were affected by the trade uncertainties as we were going through the negotiations with China. Is that your overview of what happened? In fact, that most farmers, in fact, were able to succeed despite the trade uncertainties because the backstop that the USDA provided?
It was certainly an important element of that, yes. But with any ag policy, broad stroke, there's always some areas that are going to fall short. And unfortunately, you know, I mentioned timber exports and forest products was not covered by any MFP. And you know, there's a plethora of other products that weren't covered. Broad stroke, yes, it was a tremendous help to shore up those cash flows, to shore up those margins, improve liquidity, but that didn't include everybody.
Sure. Thank you very much. Thank you, Mr. Chairman.
Thank you, Mr. Harris. In recent years, we've seen the rise of a number of farmers turning toward alternative lenders to secure more credit. This highlights the economic reality for many farmers and underscores the desperation that they feel in order to stay in business. Although loans from alternative lenders may be easier to secure than the more traditional loans, they're riskier. They often come with higher interest rates and not as heavily regulated. As the more traditional sources of credit decide to take on less risk during these uncertain times, what is the farm credit system doing to help our farmers and keep them profitable? And what advice would you give to a farmer that takes on debt from an alternative lender?
Well, an alternative lender, and you said it, Mr. Chairman, is a sign of desperate times. They're running out of options, and they're looking at last options to stay in business. You can call it non-traditional, alternative lenders. We've heard them referred to as payday lenders because of the interest rates that's been charged on them, which generally tend to be quite a bit larger than prevailing rates. So I think the best thing that the system can do and the system institutions can do, particularly in times of duress, is to encourage that those institutions work with those troubled borrowers as much as they can in seeking alternatives. I know when I traveled up in the Northeast, particularly Vermont, and visited some small dairy operations, a lot of those operations, with the prompting of their local loan officer, had diversified in other enterprises other than dairy. Diversification sometimes means, you know, one of the spouses taking an off-farm job, but the reality is the dairy wasn't providing enough income to support that family. So you can't underestimate that relationship between that loan officer and that borrower on looking at alternatives, maybe restructuring for term to get them through those tough times so they don't have to rely on interest rates that might be reminiscent of the 80s. I'm not aware of any specific interest rates that have been quoted, but I hear they're high because those are desperate measures, sir.
Well, I'm given to understand that with the trade mitigation payments that the administration has made over the last year, that a large amount of that money has gone to alternative lenders for repayment of their loans.
Yes.
Which has put some stress on some added stress on the farmers. Let me go back to the young, beginning, and small farmers. In the 2018 Farm Credit Administration Annual Report notes the need to improve service to young, beginning, and small producers, and to that extent, the Farm Credit Administration issued an advance notice of public rulemaking to collect information from the public regarding revisions to the YBS regulations. Can you provide any updates on what you've learned and when we can expect a final rule?
We just come out of the comment period on that rule, and in the process of sorting through those, and the purpose of that is to get public input from the institutions on the rule. But I would expect we'll probably be rounding up a final rule about mid to late spring on that. And that rule was directed at getting the information correct. We found that that maybe we needed to update our information collection techniques. Jeff and I initiated a new office within FCA, Office of Data Analytics and Economics. And we're really excited at the potential that office holds, and it's helping us to sort through and make sure we get good, updated information on young and beginning and small farmers. How do we evaluate this program if we don't have if we don't have a good baseline? And we'd found that there was maybe some deficiencies, and we're working hard to improve that. That's the first step.
The annual report notes that today there are high capital demands of agriculture, and new entrants require affordable and dependable credit. Do the new farmers know the resources that are available, and what do you need from Congress to reach more farmers?
It certainly depends on the size of the operation, and we've emphasized a lot on small operations. I don't think it's realistic for a beginning farmer with no other resources to go out and borrow and buy $10,000 an acre land or $500,000 line of machinery. So I think that's why the YBS program is so important, that we address the needs of those small, maybe part-time farmers first. It entails a higher degree of loan officer participation. It may not be efficiency lending, but as the regulator, we hope to exert influence to encourage the lenders to look at those type of loans.
Thank you. Mr. Fortenberry?
Yeah, Mr. Chairman, you anticipated some of my questions as well, so let's continue on that. Because again, we have a well-established system of farm credit in the United States, and we can go through the traditional questioning around vulnerabilities in the portfolio and all that. But with the emerging opportunity of, again, broadening the agricultural family around new, innovative, but smaller ways of enhancing economies and connecting the rural to the urban, your terms are a bit vague, and that's not necessarily pejorative. But can you identify, in terms of the farm credit system, the amount of the portfolio is going to these considerations of underwriting young and beginning farmers? Or what is your goal in that regard, without pegging, without demanding that you put a set aside, if you will, of a certain amount? I don't want to do that necessarily. You're talking in the right terms of conditioning the credit culture, the financial system, toward these emerging operators. Because what tends to happen in government is we lock in around a set of needs and variables, and then it gets institutionalized, and we do the same thing over and over again. What we don't want to do is not allow for the flexibility with not in any way making the portfolio any riskier, but not allowing the development of the flexibility to enter into this new space, which is exciting. It's entrepreneurial. It's the next wave of agricultural development. It's good for the economy. And again, it's a field of growing interest that's broader than what we've traditionally done, but that's okay. So how are you specifically, give some specific examples of what you're doing now. Let's move from the abstract to the reality. And then how do you envision the tactics of moving toward that goal? I get it, you're being intentionally vague. This is not a judgment on that because this isn't fully developed yet.
Right.
But what we're doing is we're pushing you
Right.
to develop this quicker because, again, I think it is consistent with your mission
Right.
and it is consistent with what we perceive as policymakers as is the demand of the people we represent, and it's good public policy.
Yes, no, I appreciate you narrowing down on that, on specific examples. And as I said, the first step was to get the information correct, which is what we did with the NPRM. I've been doing a significant amount of traveling. Before I became chairman, the first year and a half, I think I've been in 20 different states, seen a multitude of diversity in operations, which I think is important for a board member, number one, to understand this whole huge breadth of the
Let me interrupt for
agricultural
just a
industry.
second, too.
Yes, sir.
And it's not just new emerging opportunities for people who are now want to move in the ag field. It's also existing options within production agriculture for diversification.
Yes, yes, certainly, certainly, particularly as you move into areas of stress where you need to look at alternatives. So as far as me personally, I've been gathering information.
Let's put a timeline and goal on that. So we're not having the same conversation next year, which obviously isn't your intention, but let's lay down some markers right now
Yes.
as to what we're going to do when, without holding you necessarily in terms of a law to this, but let's
You're talking
lay
my
down
language.
some objectives.
You're talking my language,
Okay.
Congressman, and let's set some goals on it. One goal we have immediately in front of us, and that through my travels, the states and all that, I've noticed a high correlation of successful YBS programs as a high level of cooperation between FSA and the system institutions and the loan officers. High correlation there. I'd say above 90%, and that's from travels, listening, and learning first, okay? So as far as a specific deal, we are organizing right now. I had met with Undersecretary Bill Northey here a week ago, and we're working towards bringing a workshop here in D.C., bringing FSA, bringing farm credit, banking institutions, and other federal agencies together on how we can share this information.
Okay, I have a better idea for you. Why don't you do that at the University of Nebraska? Why don't you give us a try first? We have Center for Agricultural Entrepreneurship. I want to tell you a quick story about the Brugger brothers. These guys could be a reality TV show.
Okay.
They live in a small town
Yes.
right outside of my congressional district, traditional production ag grain farm.
Yes.
They want to do something innovative and interesting to themselves, but continue the long family tradition of the farm. So they're starting to grow hops. They bought the bar in the downtown area. They revitalized that. They're going to have their own brand. Amazing, amazing, exciting things. And it repeats itself over and over and over again across Nebraska with people who are in their, maybe 20 to 40s generally, although there are some people beyond that as well doing exciting things. So we have the Center for Agricultural Entrepreneurship. Come do it with us. Give us a try. We'll be your focus group, so to speak.
Sir, we are open to invitations, and there's even a few of those success stories over across the river in Iowa.
Well, I know you're from Iowa, and you had to slip that in, but we'll leave it at that. My time
But
expired.
I would appreciate the invitation.
Thank you.
Yep.
Thank you, Mr. Fortenberry. Mr. Smith, your testimony notes that a key factor driving the FY21 budget request is the need to hire and to train qualified individuals to replace the many employees who have begun to retire. Attrition and subsequently backfilling are challenges most agencies face, but it's particularly acute at FCA. The examiner commissioning program takes 3 to 5 years to complete, I understand. Can you discuss that commissioning process? And given that approximately a third of the examination staff are eligible to retire within the next 5 years, what impacts will this have on the examinations of the FCS banks and associations? And do you anticipate a decrease in the frequency of examinations?
So the commission, our examination commission staff is what we call our boots on the ground. That's 60% of our workforce, and that's the heart of Farm Credit Administration. So it is extremely important. I mentioned that we recruit actively at a rotation of 16 universities, and usually our class, we look at around 15 to 16, depending on the retirements and the attrition. Our average attrition is about 9% for our examiners, 8% overall agency. So every year, we have to have that active recruiting class, but even though 41% of our workforce is eligible, of the exam workforce is eligible for retirement in the last 5 years, our HR director pointed out that most of our staff stay 8 years, an average of 8 years after retirement. And that's a reflection.
After eligibility.
After eligibility, yes, sir. After eligibility, so that's a good that's a good example of a positive working environment. But those newly commissioned examiners, it's so important to offer them chances to move up in leadership within the organization. And of course, we have 4 field offices in addition to McLean that offer hierarchies of leadership within the organization. So that's important that we create our leaders within. We had a turnover on our senior management staff last summer, and we had replacements due to retirements of 4 staff members. Correction, one of those was the new data office analytic director. But all of those were brought in within the agency. We created our own. So it's very important to create those different generational levels of succession and maintain that positive work environment.
Tell me about your diversity and about your recruitment efforts. And you mentioned earlier in your testimony about the recruitment at HBCUs.
Yes.
I think we included in our appropriations bill some scholarships to deal with that and to interest people in careers in agriculture. Can you talk about that and how you're utilizing that program or how you intend to utilize it?
Yeah, and that is something that we look to with a diversified workforce and recognition of that diversity. We hired a full-time EEO director 4 years ago. And not only is she part of her responsibilities for equal employment opportunities, but also support for diversity, active programs that recognize our minority employees, which I think is important, again, in retention on that. Once we get our employees within the fold, we need to keep them. And going back, and not to brag, but placing #1 in diversity in our ranking of #2 in federal agencies, we think is a pretty good a testament to our success in those areas.
Well, thank you very much, Mr. Smith and Mr. Hall. We appreciate very much your being here today, and I appreciate your testimony and your assessment of the year ahead, and look forward to working with you to meet the challenges. They're significant to be sure, but we remain hopeful.
Yeah.
With that, subcommittee is adjourned.
Thank you.
What are you gonna do? That's what they just told me. That's like, yeah. No, just, oh.